Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Marqeta, the card payment solution provider. I'm going to talk about what investors are compelled about. We're going to talk about its revenue growth rates, we're going to dissect its profit margins, and then we're going to talk about its valuation. So let's get stuck in. So one of the things that is quite attractive about this recently IPO'd business is that its processing payment volume is going up and to the right. This is exactly what you'd hope to see in fintech. This is exactly what you'd hope to see in a company that has a lot of exposure to buy now, pay later. So it's doing many of the right things. Also, if you think about it, it's just got a partnership with Google for its digitalized virtual token for Google Pay's digital wallet. And it's expanded its partnership with one of the hottest firms right now, Affirm. So it's doing many of the right things and investors are pretty much very compelled about it, right? Now, once we kind of start going a bit further on, we can see that in fact, its guidance for next quarter leaves much to be desired. So as we look forward to Q3 21, that's the guidance that management provides us, it is pointing to approximately 41% year-over-year growth rates. Now, most likely, management has been very conservative and they're going to come out let's say 50% year-over-year growth rates. And that will obviously beat estimates handily and everyone would rally behind the stock. Now, let's take a moment and think about this. At the start of the year in Q1 21, revenue growth rates for Marqeta were up 123% year-over-year. Now let's say for the sake of discussion that the guidance is beaten and the Q3 21 they grow at 50% year-over-year. That would imply that there's been a deceleration in revenue growth rates of approximately 70% over the course of 6 months. So this brings up the question, what's Q4 going to look like? So Q4 is a very important quarter for Marqeta because it obviously spend is up in that period and travel is also quite significant in that period. So it is a meaningful quarter for Marqeta. That being said, we're really trying to ascertain what are the growth rates going to be like in 2022. So if Marqeta is able to continue growing 50% year-over-year, that this is a very compelling investment and investors are most likely going to give this company the benefit of the doubt. That being said, it's going to come up against very strong Q1 of this year. So Q3 isn't looking that good, question mark on Q4, and then Q1 is going to come up against where it was this time around, which was 123% year-over-year growth rates. So for a business that has less than $500 million in revenues, for it to kind of possibly not be growing that strongly kind of brings up some questions, isn't it? Now, another thing that I wanted to highlight is that profitability is still some time off. Now, I'm a value investor, right? And like value investors get a lot of stake in the market because we're too kind of looking back and we're too much kind of concerned about paths to profitability. And I know that it's bad taste in a bull market to even talk about profitability, but just humor me, right? So the company puts out that they guide for gross margins to be in the ballpark of 40 to 45% for Q3. Now at the midpoint, let's say 43%, even whatever, say 45%, that is a substantial improvement from what they've done just in Q2 of this year. So in Q2 of this year, the gross margin profile was 38%. So if they come up at 45%, that's a 700 basis point expansion. Very strong, very nice. But for a business that's supposed to be in fintech, for it to have such low gross margin profile, it's kind of like, it's difficult to get attracted because ideally you want a high gross margin business, a high quality business, and then you're going to reward that high gross margin business with a high multiple, okay? Now, if you get a low gross margin business, you're going to punish that business and you're going to see it as kind of a low quality business and you're going to compress that multiple, okay? Now, on the surface, the stock is priced at approximately 19 times next year's revenues. Now, as I said already, this is a relatively mediocre gross margin profile. I highlight here some comparisons. So you got Square, I am long Square, so just for the interest of disclosure, I'm also long Affirm. But anyway, just for the sake of comparison, Square is priced at 19 times next year's gross profits. And you can see here in the screen, Marqeta is probably the most expensive on a gross margin profile. Now, the question mark really for investors is not so much about the gross margin profile, is really trying to get a firm conviction that this business can grow at 50%. Because if it can grow at 50, compounded annual growth rates for the next several quarters, even into 2022, investors are willing to disregard the valuation, and you can put the argument that this valuation doesn't really matter. The business is growing at such a strong rate, and it's such a young business that it has a long runway ahead, and it can compound a very high rate of return. So it's kind of like this and that and the other. Now, if I just look at the firm, which is one of the hottest names right now, that stock is priced approximately 43 times next year's gross profit margins. But keep in mind that a firm's guidance does not include the fact that whatever it may come from its partnership with Amazon. So Amazon has selected a firm to be its buy now, pay later platform, and they're still in the pilot process, and they haven't really updated the guidance yet for how that's going to unfold. But in any case, it's one of the best names in the space, and it has a rich price tag. Marqeta is not one of the best companies in the space, and it also has a rich price tag. So it's kind of difficult to really get behind this investment. If you want to know what kind of stocks I'm looking at right now, don't forget to check out my marketplace. It's called Deep Value Returns. My marketplace is helping you become a better investor. If you're already very satisfied with your performance in 2021, then this marketplace is not for you. If you want to improve your performance, if you want someone to give you some help and give you some conviction and do some due diligence for you on the names, then come over to my marketplace. You're welcome to do a totally free trial to see if it suits you. You can unsubscribe anytime before 14 days and you're not going to get charged anything at all. You can also check out what other people have said. That's always a good way to go about it. Go on Deep Value Returns and see what other people said in the reviews. You can see the 5-star reviews. The people are very much happy with the marketplace. So what are you waiting for? I hope to see you soon in the marketplace. See you soon. Bye-bye.